Good morning and good afternoon to those of you on the East Coast. Thank you for joining today's webinar, Budgeting Best Practices with Adaptive Insights. I'm Megan Turco and I'll be your moderator for today. Before we jump in, I'm going to briefly go over how to use your webinar console. The orange arrow on the right side of your screen will let you toggle your control tray open or closed. And at the bottom of the control tray, you'll see a chat window. Please feel free to submit your questions at any time throughout the webinar via the chat function, and we will try to get to those during our Q&A session at the end of the webinar. Additionally, on your GoToWebinar console, you should see an area for audio settings. If you're calling in through your telephone, please choose the Use Telephone option, and if you're using your computer speakers, please select the Use Mic and Speakers option. Lastly, I would like to note that this webinar is being recorded, so we'll send out the slides as well as a link to the on-demand recording of the webinar within about 2 days. So definitely keep an eye out for that email if you're interested in checking out the recording or sharing it with any of your colleagues. And with that, I would like to introduce today's featured webinar speakers. We have with us John Dunnican, who is the partner for our CFO advisory services here at Armanino. He has over 30 years of financial executive, operations, and consulting experience in public and private companies, in technology manufacturing, publishing, banking, and much more. And he's held numerous high-level positions, including CFO, the VP of FP&A, and controller, with extensive experience in management and financial operations. And additionally, we have Brian Rogers with us today, who is a senior manager on our CFO advisory services team. Brian has over 25 years of financial executive operations and consulting experience in both public and private companies, and has held positions like principal and VP of finance. Brian's background includes extensive experience in FP&A roles from multi-billion-dollar corporations and as a consultant for many adaptive insights implementations. It's great to have you both with us today. I'm going to pass it over to John to get us started.
Thanks, Megan. So I'm going to just run over the learning objectives real quickly and then a little bit about the presentation overview. So what we're going to do today is we're going to spend some time looking at some of the best practices, really kind of using adaptive insights as a tool to do that. We're really going to kind of focus on a couple of areas. It's obviously a huge topic and time doesn't, in the interest of time, we're just going to focus on a couple of areas: revenue planning, expense planning, personnel, and capital. We'll also spend some time talking about some ways to improve reporting and create what-if scenarios in adaptive and for budgeting, broadly speaking. So for an overview, we're going to spend a few minutes just talking about the CFO evolution, the role of finance in an organization, and particularly as it relates to budgeting, forecasting, obviously. Talk about some of the common challenges in budgeting and some solutions, some reporting, and as I said, some scenarios, scenario creations, and some of the benefits of data integration to make the budgeting process easier. Here at Armanino, for those of you that are not currently clients or are not real familiar with us, we really kind of focus on the CFO organization and what we call CFO evolution. And it's really about helping organizations, the finance organizations, move to a much more leadership-focused position. Real briefly, what this current slide shows is we do an annual survey of CFOs. We've been doing it for a number of years. And the results have been pretty consistent over time. Most CFO organizations spend the majority of their time, as you can see on the left side of the screen, in the accountant role, which is basically closing the books, doing account reconciliations, basically reporting, those types of functions that really are kind of the blocking and tackling of an accounting department. 20% in what we call a protector role. For a public company, that'd be Sarbanes-Oxley. For non-public companies, it's just broadly speaking, internal controls, protecting assets, essentially making sure there's no unpleasant surprises for the company. And about 25% in business leadership roles, which is really working with the C-suite, the other executives, doing budgeting, forecasting, business modeling, looking at new products, new markets, all those kinds of activities to really move the business forward. Real simply, when we then ask the same organizations how they like to spend their time, not terribly surprising, it really kind of turns on its head. Companies want to spend a lot less time in the accountant role, a lot more time in the business leadership role. And it's really a question of looking at people, process, and technology to make that happen. so that you can really streamline the accounting, kind of fast and accurate, and then really focus on the strategic outlook and looking forward with the business. So that's kind of what we try to do. Clearly, working with programs like adaptive planning, really focused on better forecasting, is really a key way to enable you as a part of the finance organization to really kind of have that forward-looking view. Along those same lines, the role of finance really kind of changes over time. I'm sure your role, this kind of makes sense. It's kind of intuitive in a lot of ways. Really kind of rolling from the accountant role, really more of an FP&A manager's role. The accountant role is very dominated by complex systems, kind of annual budgeting, and kind of basic accounting. More of an FP&A role where variances, much more management focused, really kind of focusing on minimizing risks in reporting, up to business leadership or business partners first, really kind of supporting decisions in the C-suite, and ultimately to business leaders, where you as a member of the CFO organization, the finance team, really become integral to the leadership organization of the business and really have a key role at the table in making decisions. That's really kind of the role of finance, what we're trying to accomplish, what we're trying to help you accomplish through today and other activities we do with organizations. We are going to do a couple polling questions today, just to kind of get a sense of the audience, and I'll let Megan lead that.
Thanks, John. So momentarily here, you should see on your screen our first poll. What planning and reporting aspects are the most challenging in your organization? Revenue planning, personnel planning, operating expense planning, reporting, and data integration. So we'll give everyone a few moments here to go ahead and submit their answers. And of course, there is no right or wrong answer. It's dependent on your personal organization. So we'll go ahead and close the poll in about 3, 2, 1. And I'll pass it back to John to chat briefly about the results.
A little interesting. It's a little more skewed to data integration than we usually see, quite honestly. Revenue is usually the top item on the list. Revenue planning for many companies is very complex. Data integration is usually more of a second place. As I said, this one's kind of flipped on its head. Data integration obviously is a real challenge for many companies because a lot of companies tend to rely heavily on Excel, and integrating data through Excel can be very, very cumbersome, as is, even if you're not relying on Excel and you're relying on systems, companies tend to have systems not speaking to each other very well. So having integrated systems really does make your life much, much easier. And maybe this is just partly a reflection of the change in organizations and how they operate. So interesting result to see that. So with that, I think we're going to, I appreciate your responses to those. And with that, we're going to kick it over to Brian, who's going to start talking about some of the best practices, starting with revenue and personnel.
Excellent. Thanks, John. So I am filling up my screen here. So I'm in an adaptive insights demo model, and a couple things that, to keep in mind as we get into this. I mean, I think there's really 4 points that, when we talk about adaptive insights and what it can do. I mean, think of it as your relational database specifically designed for planning, reporting, forecasting. And the items that I really want to focus on in this is, with the model, we need to focus on those things that really matter. We're really looking at that 80-20 rule, where you want to look at the business drivers, your customers, your key metrics, your assumptions. Those 20% of those items really drive 80% of your results. And that's where your efforts should really be focused. And what you're going to want to do, too, is make sure that adaptive is doing the heavy lifting for you. And I'll show you what I mean by that, but basically doing calculations that you already know of that are important. And then you want to expand and collaborate the solution. Make sure you're involving, like John said in the previous slide, enterprise-wide collaboration. Makes for an excellent experience in leveraging best practices. So what I want to do first off is kind of look at, what if I'm a manager and I wanted to adjust my revenue plan? So right now I'm going to look at my P&L sheet. And by the way, I have all kinds of sheets that I share with my management team in here. I've got an income statement, balance sheet, cash flow, expense sheets, and everything kind of comes together in this income statement. But a best practice is really to have the model development and the logic in other sheets that feed a summary sheet like this. And this is exactly what we've done with our revenue model. So I'm going to focus on my product group A. It's $1,128,000. We've just had a management meeting. I know I've got to increase that. We've got a big order in January, and I want to change that for a particular part of my business. So what I'm going to do is I'm going to go over to my product sales sheet, and I'm going to be the sales north manager in this example. So I'm going to go to my sales north example, and I notice I have 152 here for units. And you'll notice this is set up to really do all the heavy lifting, like I said. So I've got calculations built into this sheet that help me develop my full revenue, my cost of sales, standard variable cost, gets me down to a gross margin, and I can do that by product. I can do that by customer, and I can select any given component on here and whittle it down in that fashion. In this particular example, I want to change my sales north organization, my product A, and my customer 1 for the month of January. So, and I just came out of a meeting. I know this number is going to change quite a bit. So I'm going to type in 10 grand just to basically show the impact. So this is now, awaiting for me to figure out what I'm going to do next. I've typed a number in. I hit save. I can immediately see that number is in there. It's in black. That means it's been saved. Now when I go back to my P&L, and you'll notice I had selected my sales north region, so now I'm looking at just the sales north component. I can drill into this number, and I can see where that number came from, and it's connected to my cube sheet. And I go into my product A, product A1, and my customer number 1, and I can see where that number is coming from. So that 10,000 cube units times 92 units. You can see the formula, but what's great about it is, now I can trail back to the logic and the development of my revenue cube sheet that I've created. It creates a very easy way to manipulate going forward. So let's say that I'm still the sales north manager, and I'd like to look at my personnel planning. I've set up an example here, and again, I want the model to do the heavy lifting. So what we've done on the personnel planning is I've had my team load in my current staffing roster throughout the model. So as a sales north manager, I come in and I look at my personnel planning sheet, and I've got my whole staff out here, and I know that I've got a new hire that's out here in the month of June. I'm going to change that to the month of January. And so if I go to my expense sheet just to kind of level set as to where we are, you can see we have a little bump in the salaries. I've got a recruiting fee. I've got new hire training. All these are calculated in that personnel model and then fed back into my GL accounts in my plan periods. So now what I want to do is go back into my personnel file. I see where I've got my new hire down here. And instead of hiring them in June, I want to hire them in the month of January. So I'm going to back up my calendar to January. I'm going to hit January 1. I'm going to hit save. And now I'm going to go back to my expense sheet. And I can now see the numbers that were there in June are gone on my recruiting and my new hire training. and now they're in January, and you can see, things like if my new hire started in that given month, well, then they're counted in that, and I've got training at $180 per training, and I'll show you assumptions in a little bit that automatically flow through. So all I really have to do as a manager is to make sure that my personnel sheet is updated with the current data. The model does the rest. It's going to calculate salaries, commissions, bonuses, training. It's going to trigger a laptop purchase. It's really the best practice way to set this model up so that, again, your model is doing the work and your managers are simply giving you the input where you need it. Don't tell me your entire staff. Just tell me the number of people and when they're going to be hired. Any comments, John, you have on those two parts so far?
Sure. Why don't you talk, Brian, for a moment, a little bit about, you referred to the kind of the 80-20 rule. Why don't you talk a little bit about, how companies determine that and kind of the real benefits of doing that, as opposed to, if I'm a user, I mean, I can list out, 1,000 customers and 1,000 parts that I'm selling, but, why use 80-20? How do you kind of get there?
Yeah, so really what we would do in something like this is, let's say that, maybe customers is a good example. You're going to want to set this up and say, the top 3 or 4, maybe 5 customers are representing a majority of your business. You've got all these drivers. You've got some great historical metrics that validate that. And then you've got a lot of smaller customers that are kind of in and out. The numbers are bouncing all over the place. But as a whole, maybe customers, below a certain, revenue amount are, in aggregate they perform alike, but individually they're all over the place. You're going to want to create an all other on here. And again, create this forecast so that you're really focusing in on what are those main customers, what's the history, how's that going to affect, and use a sheet like this, where I'm asking my manager to simply put in numbers where it's white. Anywhere it's not white, well, those are calculated fields. Those are going to be different. The user isn't going to be able to impact that. So the model's doing all the work. You're simply just asking your manager to input the units, and again, I'm really just those top customers.
So
and you might be able to use historical factors on all others. Yeah, go ahead, John.
Yeah, I was going to say, I think that one of the things to keep in mind when you're saying, particularly revenue sheets, because revenue can be extremely complex. And as you say, you can have a lot of customers, but there's typically a handful of customers that are really going to drive the business. Likewise, you may sell a lot of products, but again, there's probably a handful of products that really kind of drive the business. And in deciding, how much detail to put into a budget model, whether it's being adaptive or Excel or whatever, one of the things you want to always keep in mind is not just the annual budget, but one of the goals you really want to move towards is towards monthly rolling forecasts. So we haven't kind of gotten there yet, but when we talk about that a little bit later. But when you're doing a monthly rolling forecast, you want to be able to forecast just based on the big items that are really going to move the business. And that's really the big advantage of doing kind of we always refer to as 80-20, but obviously, that's kind of a rule of thumb. But you want to be able to focus on just those big customers and those major products that are really going to change your business month to month as you're doing your forecast. And over time, they're obviously going to change. But if you kind of do that, then the best practice is really to focus on how do I do this and make this easy to do every month, because you obviously don't want every month rolling forecast to become a 3-week 4-week budget process, kind of as we traditionally think of that. You really want to get it down where the updates can be done in maybe a couple hours, a couple big customers, a couple big products, and really kind of understand where the business is going quickly and easily. So there's a lot of advantages to kind of really limiting to just who they are and what those products are, and really kind of doing some analysis up front to really kind of focus on that.
Yeah, and what I think is really facilitated by a solution like this is, and we do this all the time for clients, is to be able to say, look, take the average of the last 3 months for cost per unit or material percent of unit price or some of these key metrics that are going to drive your numbers, but maybe they don't fluctuate a ton, or at least over an average period, they stay in a certain range. where you're going to want to have those driven by actual metrics and focus, like John said, on on your efforts on the higher level. What are the units of sales from your largest customers and products?
Okay. Why don't you spend a few minutes talking about the maybe you're going to get to this. I'm just completely throwing you off your but kind of the underlying assumptions that you've got. You've mentioned the assumptions behind the spreadsheet so that the system's doing the heavy lifting. Why don't you spend a minute talking about that a bit?
We have all kinds of assumptions, and so I was gonna get on that a little bit with our expense example, but we've kind of got the same thing going here with the top level. So we can see the 2014 and so on. So this is an example like I was talking. Whatever the key metrics of your business, we're showing actuals in green here, and you might want to set up an assumption sheet where the owners of these, who's ever responsible for, let's say, your COGS development, has an area where they can input these assumptions on costing, and those will flow directly into that cube sheet for production, of the premium and the revenue and the cost of sales, gross margin calculations. So this could really facilitate, the planning process, but make it an easy, one-stop shop to input these kind of assumption drivers.
Yeah, unfortunately, Brian, you cut out there for a moment for whatever reason. So just if I can make sure, recap, tell me if I'm saying this wrong. Essentially, what you're doing is you're setting up some key drivers on a separate, and adaptive would be a separate sheet. Even if you're in Excel, it would be a different tab. That really kind of get set up once and really kind of drive the business. The items you got here obviously are all revenue related, and really kind of the practice you really kind of set those up separately so that you can track them separately, and if they do need to change, you can change them. But you've kind of isolated them, and so that whether it's a sales north manager or the sales west manager, whoever it is, they're all working from the same set of assumptions. So you don't end up with a situation where you've got all kinds of pricing and cost information that's all out of sync, and you've got different people thinking different ways, and then your plan obviously becomes a reconciliation, a reconciliation project as opposed to a business tool to use to forecast the business.
Yeah, and keep in mind all these assumptions and drivers, they're all version specific, and I can have all kinds of different versions, really as many as I'd like, in adaptive, as a dynamic connection with actuals, but all these assumptions are particular to my new plan, but my first quarter update that has 3 more months of actual, so on, can have a whole different set of assumptions, but use the basis of my original plan as a foundation.
Right. Okay. I guess the same thing's really true on the personnel as well, isn't it?
Sure. Exactly. Pull that up here. Yeah. So with staffing, you might have, here's your current staff, here's your new hire, but maybe you have a different scenario for, boy, what if we really grab some of these accounts, or we go a different direction, we add a whole bunch of people. You could easily create a new forecast and simply, click on our add button here and add, as many people, different levels of the organization. If you're going to have a drop down and so on. But this is where you would do that. You'd have access to your calendar like I was showing before. But all these inputs are directly connected to calculations that, like you saw before, tie into your GL accounts. But again, version specific. And those can be compared in reports and so on. So you can easily see the impact of whatever you're changing in the forecast.
So another question related to that is, I want to share some thoughts on how much information you should put into this spreadsheet. I mean, so you got a lot of data in here for the personnel. Do you think that's that's appropriate, too much, too little? Kind of what are you seeing when you work with clients? Or what are clients looking for?
Well, yeah, so we do see a typical, load of the staffing, and once you have this set up with all your calculations, it really does itself. You're really not manipulating anything. However, for those organizations that are, you've got thousands upon thousands of employees, you may even, track this by employee type. Maybe it's a sales rep in a call center. You want to aggregate, classes of employees, especially if you've got, some interim summer stuff with a group of interns perhaps, or, there's all kinds of different examples, but we can use the date specific and the, all the assumptions on annual or hourly salaries to drive, the numbers. But typically the personnel model and adaptive is used by individual, but it's very flexible. Okay. And Megan, I think we're ready for another polling question here.
Thanks, Brian. So we'll get the screen back over to your polling question here for the next poll. And our second poll is about capital and operating expense planning. So for capital and operating expense planning, are assumptions, schedules, and drivers utilized in the process? Yes for both, yes but only for one, on a limited basis for one of the above, or not at all. And we definitely encourage everyone to participate. Like I mentioned before, of course, you don't have to rewrite. So it looks like we've got almost about half of our attendees voted in here. So we'll give everybody else a few more seconds to submit their thoughts on this particular poll. And we'll close it in about 3, 2, 1. And again, I'll pass it back to you, John, to chat briefly about the answers.
Okay. I like this result. I'm not terribly surprised. There's been a lot of emphasis lately on really kind of using assumptions to drive the budget. I think people have come to understand, just dropping in numbers into a spreadsheet is not an effective way to budget. So we're seeing people heavily relying on assumptions and drivers in the budget process, and that's obviously a very good thing. So now we just, now it's a question of making sure that the assumptions and drivers are really the right ones for driving the business, and working to make sure and keeping refined those. I think it's one of the things we spend a lot of time with, not a lot of time, we spend time with clients talking about is really how to make sure those assumptions and drivers are really the right ones that are really moving the business. But it's good to see that people are using them and clearly making their models and budgets process a lot more effective.
Yeah. Excellent.
So Brian, I think back to a couple more things you want to look at.
Sure, exactly. There we go. So what I'm going to do is pull up my capital model and show a little bit more of what we can do there. And I think if you're using adaptive, you've probably got a pretty robust capital model. But one of the things that I think sets it apart as far as how to use it well, what's a best practice, and how to get your team involved in this thing. And number one, I mean, this is a good example of, I didn't type in a laptop purchase here. I triggered the laptop purchase based on my new hire. So my new hire that I added in January, we have part of the model says, hey, every time I hire somebody new, we're going to buy a laptop and we're going to set them up. We know that up front. Why not just build that into your model? That number automatically goes to my fixed assets, my accumulated depreciation, my depreciation expense immediately impacts my cash flow. So that's a good example of maybe one of the drivers. The other thing that I've seen and used myself, and I've seen other clients use that I think is really effective, is look at adaptive to really contain all of your capital asset, wish list, if you will. Have all your managers, put everything they would ever want on here, but have a column like this where we could say, look, this is a pending project, it's approved or it's rejected, but only those items that are approved are going to be the ones that actually end up hitting your planned GL accounts in your forecast periods or your rolling forecast. And by having something like this and all your data in here, it's very easy, again, to use the versioning with an adaptive to say, okay, that's what we submitted and approved by the board, blah, 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 but I made a copy of that. I'm going to go back in here, and those leasehold improvements, well, what if we approve those for, June or something? How's that going to affect my cash flow? And in this case, maybe we're going to take furniture and equipment, and I'm going to add $10,000 there. I'm going to hit save. That's in January. We want to easily be able to run back to, and I'll go to the total company view, easily be able to run back to the total company, pull up my balance sheet, and be able to see, well, where did that number go that I just input? Well, if I go drill into my property, plant, and equipment, I can see that, hey, this is connected to my sales north region. I'm going to drill into that. And then I can see I've got my new hire laptop that I just did, and then I did shares for the conference room at 10 grand. So I can drill all the way back, and again, best practice is set up these models to support your forecast and give you the detail that helps you, determine, where did that come from, what's the details behind it, but roll that into your numbers. And again, and that would flow through accumulated depreciation and so on. So what we what we see with the capital component is not just, what are those new items, but you're going to have, your existing fixed asset sheet, also loaded in here. So you're going to determine, hey, what are those? What's the existing depreciation, amortization? What's the new purchasing? And then make sure both of those independently come in and connect to your balance sheet and your income statement. John, any other comments on capital?
No, I think that I think you covered it well. The only, the other, as you talked about again, using the assumptions that we talked about before, the concept, the assumptions you talked about before. Two of the things you kind of build in here into the model, which makes life a lot easier. One is, you talk about the laptop and the fact that you automatically purchased a laptop when you added a new employee. But you also got assumptions, hidden and built into the model that, kind of have those laptops pre-priced out. So you don't have to worry about, if I'm a manager of a particular department and I know I need to buy a laptop, well, the budget already knows, or the corporation already knows how much a laptop cost. The same may also be true with, maybe chairs. If we're buying a lot of chairs, that's something we buy regularly. Whatever it is we're buying, anything we're buying regularly, if they're set up as assumptions as to cost, it makes the process much simpler. And again, when you're thinking about doing a rolling forecast, and because that's the way you want to go, the objective is to build in as many assumptions behind the scenes as you can, so people can quickly update and make changes to just the things that matter. Like, hey, I'm hiring one new employee, and let the model do the rest of it. Then the rolling forecast process becomes much simpler.
Yeah, and another comment on this with, assumptions and drivers, with, behind the scenes is a whole series of depreciation and amortization schedules. So any laptop that's purchased, the model automatically knows, hey, this is going to be a 36-month straight line depreciation. Furniture and fixtures, maybe it's 60, and so on. So those assumptions are built in. Whenever I put in a number for a given month, it'll know to trigger that depreciation off from that point in time. So another thing when we talk about expenses, there's a lot of different ways to go about planning, as an example, travel expenses. And I think one of the ways that, first of all, we want to do that is set up some assumptions. and I've got that right here. Well, let's say that, your company spends a lot of time and effort in the planning cycle, planning expenses. Well, it really shouldn't be that difficult. In this example, let's say that we've narrowed it down and said, look, the domestic airfare on average costs this much, international is this much, hotels, meals per day, rental car per day. You've got expense guidelines, you've got per diem amounts. Build all those into your planning model and put them in an assumption page. And then when you get to actually planning the travel itself, I'll go to my travel page, you might have a sheet like this where your managers can easily come in here, and I'm looking at the Sales North example, but they can say, look, I'm going to have a seminar, a conference, here's my description, maybe that's just a free-form text field, it's going to be on a certain date, and they're just worried about, again, these areas in white. When's it going to happen, how long is the trip, and are they traveling by air? The model, based on the assumptions and the calculations, is already going to be calculating all these factors: total travel, total airfare, hotel, meals, rental car. All those drivers and assumptions, go into making these calculations, and those fit back into your GL accounts. So the model's doing really all the work. Your managers just need to input some basic data, and that really creates, and it helps facilitate the collaboration, and is really a best practice on this. But this is a travel example. It could be just about anything on expenses.
Yeah, it also becomes a good way to help management, like in the case of travel, control travel expense, because it's giving you benchmarks for which you can use. And this one, it could be how much the company expects to spend on airfare, how much they're going to expect to spend per night on a hotel, and then it becomes very quick to identify where your outliers are, what your problems are. If some in particular manager keeps spending 2 or 3 times the corporate expectation in hotels, you may have a problem there. But it very quickly gives you the red flags to go look at and understand what's going on. So it's very convenient to have those assumptions, not only because it makes the model easier, but also then makes variance reporting easier and identifying potential issues and things you want to look at more closely. And everything else that's, the ones that are like right on plan, you don't need to focus on as much. And again, it gives you the ability to spend less time in that accountant role, a lot more time on the business leadership role, because you're just focusing on the issues and what matters, and not all the other transactions that might be sitting out there in any given month.
Yeah, exactly. Very good. All right, Megan, I think we're ready for our next polling question.
Great. Thanks, Brian. So we'll get your next poll up here, and this one's a pretty easy one as well. It's just sort of another opinion one. So on your screen momentarily here, you should see your third poll. On a scale of 1 to 5, how effective and efficient is your ability to report and disseminate results on a monthly or quarterly basis? And of course, it's just 1 to 5, so I won't read the answers for you all for this particular one. And I know today's webinar is not for CE, but we do definitely encourage everyone to participate in the polls. It certainly helps our team in helping you all, and then of course John and Brian knowing how to sort of direct the rest of the webinar presentation today. So we've got some polls in here, so we'll give everyone a few more seconds before we close it. And we'll close in 3, 2, and 1. And John, I'll pass it over to you to discuss those results as well.
Well, that's interesting. It's obviously this is a significant problem for a lot of companies. This is with a 2, that's a little lower than I would have thought, but yeah, it's probably consistent with the data integration as well, because those tend to go very much hand in hand, reporting and dissemination of results and data integration. Clearly, at the end, after you do your budget, your forecast, you do all the analysis in the background, the ability to report that to management in a way that makes sense, is easy to understand, especially for the non-finance people in management, whether it be in operations, engineering, sales, marketing, whatever it is. They need to get the information in a way that makes sense to them, not necessarily in the way it might make sense for an accountant. Us accountants, we like general ledgers, we like spreadsheets, we like a lot of detail, but that doesn't necessarily work well for the folks outside of finance. So it's interesting. This is a big issue, and I guess, Brian, we're going to spend a few minutes talking about it. So why don't you go ahead?
Exactly. So, Megan, if you can, there we go. So what I'm going to do is log in really as an executive or as a report-only user to my demo model here. So as you can see, I've only got access to a few things. I can look at reports. I can look at some data visualization and process. Where's the plan at in the process? Who submitted what? When's it due? Kind of thing. But I don't have sheet access, and all the models that I was showing you. Maybe you've got a select group of individuals that they just want to look at the information. So maybe they want to be able to have a favorite or their own folder where they can pull up a report like this and say, hey, here's my revenue per employee, my head count, the trend over the month. We can create these so that you can see, based on the variance to the previous month, we're going to do a red arrow down, we're going to do a green arrow up kind of thing. It could be a very visual, way to go. But once you have a series of reports set up, then you can simply just have those individuals, access it at the level that they have access to within the organization. They can run the same report themselves. Now the report's out there. Hey, April's updated. Run it for April. We don't have to recreate these every month. They exist, and whatever you want to select from, you can get an updated list of results for that. So that's one example. This is another example we see quite a bit, and this is a good example of, hey, you know what? You've really only got one report, but as you can tell, I've got every combination of org level and time element that I want on here. And if I simply just want to see my sales north for the month of February, well, then that's what I select. I hit my green arrow, and that's what I see on the screen. So I haven't downloaded this into Excel and recreated a whole monthly package. I've had this residing in the solution. I can be running a go-to meeting, a WebEx, what have you. I can show this on the screen. I could email it to users, in the company, or they could self-access. They could jump on an iPad and pull this stuff together and look at it themselves. So what we want to do is eliminate the order taking from finance and be able to say, hey, here's the folders, here's the reports that you want, send out a note that says, hey, it's updated now for the current results, run it against plan for the current period of time. Some of the other things you can do with the reports, maybe you want to have a rolling kind of view of a report. So in this case, I'm showing March through February. It sums these 12 months. It compares to the last couple of years. Let me move this over a little bit. But I could easily select a new month on here. Maybe I want to select February again. Hit the green arrow, and you can see now it goes from February of 2014 to January. Shows me what that looks like, and so on. And anytime you see a plus, you can expand. See that. You could certainly send all these to a PDF from Excel, but I think the best practice is, quite frankly, using your meetings and the way to look at it is either a self-service or in a meeting you're just putting up this HTML on a large screen. Why create another process to disseminate information if you really don't have to? And another thing, we talked about using all of our different forecasts, comparing them. What you can do too is really put any any given set of reports out here. So here's a, let's see, expense trend. Here's some more reports. Well, we could put any version that we want on here, whether that's the forecasted plan, the approved plan, an updated plan. Any of those could be dragged into a certain column. And we can do things, calculations within the report. I think is sometimes we see a lot of clients that are importing results into Excel to do other analysis. Well, you can do that in Adaptive. Here's your 3-month trend. Here's your 6-month trend. Here's the number. Here's the highlighted value. So that's a little bit on reports.
Hey, Brian.
Data visual. Yeah, go ahead.
Before you jump off the reports, I think one of the things it's probably worth talking about is basically the ability to provide feedback, notes, comments on some of the reports, because clearly one of the things that helps drive efficiencies and really kind of helps finance move to the business leadership roles is very quickly getting information, not just disseminating information out, but getting information back, so they can understand what the trends are and what's going on. So why don't you take a moment and kind of talk about that process as well, and how you might want to think about doing that.
Yeah, so I mean, one of the things, like we've seen on here is really make it interactive with your team. So not only, is it a great way to, like John said, get it out to the team and all, but make your process such that, hey, when you're looking at these variances, and maybe there's red flags, there's other colored flags, make it a conversation down here. Put footnotes, in the report that explain these variants. What's going on? Why is this number out of whack? You've got the ability to, show this data in different ways. And, you could certainly drill into this, but you create this conversation and this dialogue with your management team so you can make this one-stop shop of, here's the results for the month, here's the variances, and here's what's going on. And we can have, cell notes that are brought forward and again, put into a sheet like this. Okay.
All right, you talk about the data visualization side?
I'm sorry, I didn't hear.
I said you can talk about the data visualization?
Yeah, so that's the next piece here. So we can tailor make these charts and graphs really for any particular user in your organization. And this is an example of, maybe what an executive might see for a dashboard. Here's your KPIs, here's your EBITDA, here's your gross margin percent. Maybe you've got some revenue trends that you want to see, bars and, shaded areas on, net income. Well, what's nice about this, you could very easily scroll around with the detail that's in your model. Now I'm looking at total operations. I want to look at total U.S. results. In the same manner, I want to completely drill through it and look at, how does the sales north with the same measurements look? And I can get to all that data. And I can always scroll on this and drill further into whatever detail I've loaded into the solution. But if I'm looking at a month, I could very easily click on this and look at the quarter, and I could look at the year in total. So it's a very flexible tool that we could tailor make, for individual users. And again, that's an executive view. Maybe you've got an HR view or a sales view, or you've got others that are simply just visual. And some of these charts are really what they're looking for. They don't need you to reinvent the wheel with an Excel, chart or a PowerPoint deck. We could easily set up this kind of a viewpoint and have them access this again as a kind of a report-only user with an Adaptive.
Yeah, what's nice about it is since you can have all the customized charts, is you can really kind of have the information that individual managers want. As you kind of said, Brian, I mean, what human resources wants to look at tends to be very different than what maybe the operations wants to look at, which is different than the engineers, what they want to look at. The CEO wants to see things at a different level. Maybe it's a higher level, more broad information. The salesperson is interested in a lot of sales detail. So it's the ability to really kind of customize it, which really kind of enables you as the finance part of the organization to really become the one-stop shop for all the information they need, really actively participate in the discussions about how to move the business forward and where the business is headed. Because you've got that information readily available, and you really become a key component of the whole process.
Yeah, and I think one of the things that keeps coming up, especially for folks that maybe they implemented a long time ago, or they kind of did it in phases or whatnot, they might still have these side Excel models and analysis and ways of disseminating information. There's really no reason why you shouldn't just bring all that into Adaptive and create, like John said, a one-stop shop. But it doesn't have to be just financial. We can do all these metrics with your head count, expense per employee, maybe it's dollar per square foot metrics, and any kind of thing that is critical to your business. Create these dashboards that highlight the trends. Okay. All right, Megan, I think we're
so this will actually,
for the next.
Yeah, thanks, Brian. So this will actually be our last poll question for today, and then we'll move on with some of the rest of the webinar. So in your ideal scenario, what data would you want automatically integrated into your planning and reporting solution? And I know earlier, of course, we mentioned, integration is really important to a lot of folks. So we've got the general ledger system, trial balances and transactions, your CRM, integration to CRM for sales pipeline info, HR, your staffing list, salaries, benefits, start and end dates, operating client data, transactions, units sold, all of those types of things. And of course, anything else, third-party data sources or anything like that. So it looks like we've got just a little bit over half of our audience here voting. So we'll give everyone a few more seconds before we close the poll. And we will close it in 3, 2, 1. Thank you, everyone, for participating in that poll. John, I'll go ahead and pass it over to you to chat about those results.
Okay. Okay. So general ledger obviously is what everybody wants. No surprise there. Seeing the CRM data is not very surprising either. Obviously, for the sales organization, the CRM sales pipeline information is critical to doing forecasting, understanding where the business is headed. The staff is, salaries, benefits, all that compensation-related information is a critical piece in most businesses. So yeah, so these are pretty well expected. More information as we said. This was obviously highlighted as a big area of concern. So yeah, pretty well expected.
Yeah, and that's like John said, that's pretty typical of what we see when we're looking at integrating data. And this gives you a pretty good example with when you're talking about your statement of record, your ERP, EPL system. We have an integration team at Armanino, and typically we're doing it so that we're bringing your trial balances and your transactions from your ERP into Adaptive. We're able to do unlimited number of budget scenarios, plans, what have you, and bring all that data, if need be, back into your ERP. And we often get questions like, well, who do you have utilizing? Do you have the same users in both systems? How does that work? And where do you cut the line and draw the line? And what I usually like to say is, your statement of record really gets you through your reporting, your month, your actuals. If you want a budget in there to figure out whether you got the right number, accrued for, or what have you, compared to budget, I think it's valuable. I think, when you look at disseminating to a wide audience and using reporting and the metrics and the dashboarding that we saw, I think you want to do most of that in Adaptive, quite frankly, because it's so flexible. But one of the things that we've seen and we've done in different demo environments and for clients is the ability to bring in multiple, up to, basically 8 different dimensions from an ERP and a lot of that information, location, department, project, whatever that data is, and put it into a multi-dimensional sheet within Adaptive and plan it accordingly, where it needs to go within Adaptive. But leveraging really all that granular dimensionalized data in your ERP, that's something that our team at Armanino and our integration team is really good at, and we can really approach this integration in a strategic manner and really make the data in your ERP not just hey, it's a trial balance transfer, but it could do rev rec schedules and, like it says, deferred revenue, a lot of different data that we could use in the planning and forecasting stage that is really valuable to running your business.
Yeah, I
but
think
automating that, of course, saves you a lot of time. Go ahead, Jen.
Yeah, I was going to say, I think that I think that what the previous slide showed was, really the value of integrating data, and clearly the more data we bring in we're using ERP system here very generically, obviously, because that could be your general ledger system, it could be your CRM system, it could be your HR system, it could be your operating, whatever you're using in operations for sales, whatever. And by really integrating these systems together and bringing all that data together, we really can make the whole process very effective, very efficient. And that's all part of really, as you say, Brian, moving from being kind of that business, that accountant role, really into the business leadership role. And by eliminating this time spent moving data back and forth, moving data, trying to reconcile data, and finding all that data, creating reports, by just bringing it all back and forth, whether it's bringing information to Adaptive, bringing information from Adaptive back into the other systems for reporting purposes, you really can streamline the reporting and the whole process to really kind of help you move to that business leadership role.
Yep, exactly.
So in this webinar, we've covered a number of things. We can actually obviously spend a whole lot more time, but we want to be sensitive to your time. For those of you in the Midwest, we've just managed to use up your whole lunchtime. So we want to make sure you got a few minutes anyway. So we covered a number of things today. We talked a little bit about the CFO evolution, the role of finance. But we're going to spend most of our time talking about some of the budget challenges, solutions, and a lot of the best practices and ways to kind of streamline the budgeting, streamline the reporting, really kind of focus on what you need to do to move to a rolling monthly forecast and how to really simplify the process by focusing on really what the key drivers are, the key assumptions are that move the business, and hopefully not get bogged down in a lot of detail, while very important from an accounting point of view, doesn't necessarily move the business from the folks outside of accounting finance. Then that's not the things they want to focus on. I really kind of focus on those things. We didn't spend a lot, Brian spent time talking about the various versions and scenarios, and clearly the benefits of data integration, having all the data in a single system and be able to do that very, very efficiently is a key.
Well, thank you, John and Brian. As John mentioned, we are actually out of time for today. So for anyone who did submit a question, we will follow up with you after the webinar. And of course, if you do have any questions in the meantime, John and Brian's contact information is up on the screen here. As I mentioned earlier, we will definitely also send out the recording of today's webinar and a link to the slide deck. So definitely keep an eye out for that. As you exit today, there is going to be a quick survey. Please take a moment to let us know your thoughts on how today's webinar went. Thank you so much for your time and have a great day.
Thank you.
Thanks, Megan. Thanks.